Today I would be talking about the ownership of medical equipment. Now, as a doctor, everybody has got a pride of ownership of their own equipment, the very sophisticated, highest, latest technology equipment. So it's very essential we know how are the different methods by which we can buy an equipment, procure equipment, and use it to our good use. So coming to the start, one of the most common ways in which people procure equipment is by using loan. Coming to the loan, I would like to explain to you in a very simple way. Any financial institution, when they give you a money outrightly and they are asking for a regular payment, they will always ask for a guarantee. Now, depending on your capabilities, they will propose an interest rate. Now, what is this guarantee, or in technical terms, the collateral? Now, if I take a medical equipment loan, there are two ways in which they can process it. Firstly, a separate collateral which is different from the medical equipment, and or the bank can keep the medical equipment itself as a collateral. Now, take the example of a home loan. If you are applying for a home loan, why the home loan interest rates are low is because the collateral for the loan is the house that you're buying with the loan. That house itself has the value enough to repay the loan at any times if you default. Similarly, in medical equipment loans, the bank can take the medical equipment itself as a collateral and give you a financing on that. Or else, if they don't want to do that, or you don't want to do that, then it's also possible that you can take a loan as a business loan or a personal loan. Now, when you take a business loan or a personal loan, the interest rates are going to be higher, but when you take a medical equipment loan, the interest rates are lower. Know that when you approach a bank for a loan to buy a medical equipment, a lot of the smaller branches and the ground level personals will not be handling the medical equipment loan, because medical equipment is a slightly technical department, and hence most of the banks have a dedicated team who handle this medical equipment loan. So for instance, in the city of Hyderabad, we have only one branch of a particular big bank who deals with medical equipment loans, but there is dedicated staff around 4 to 5 people who know the medical equipment industry inside out, so they will be able to help you on that. But when I approached a smaller branch of the same bank, they tried to stick me with they tried to sell me a business loan in the saying that it is a medical equipment loan. So be clear on that. But if you're taking a medical equipment loan, that is a dedicated loan product for a medical equipment. The medical equipment itself is the collateral in this case. So that is the loan part. Second is a lease. Now, when you look at lease is a very not a very common concept in India. The reason why a person or a hospital will take equipment on lease is because it doesn't show on the balance sheet as asset. So if you have 10 lakhs, you have money of 10 lakhs and you buy an equipment worth of 10 lakhs, that equipment spend is not an expense. Actually, what you're doing is you are exchanging that money with an equipment, and the equipment comes into your asset, and only the depreciation is taken as expense. In terms of a lease, what happens is the rent that you pay, the lease amount, also known as the rent that you pay, is 100% expense, and you never own the equipment. Now, one of the NBFC companies who does one very interesting management of this finances, I don't want to name them. You can contact me later if you want to know. Now, what this company does is they provide you the equipment in the form of a lease, but the lease amount is equivalent to the EMI that you would be paying for a medical equipment loan. So what happens is this medical equipment doesn't come into your balance sheet, your asset value doesn't increase, but the entire EMI that you're paying, EMI which is labeled as the lease amount, can be charged off as expense. And after the tenure, that is the 3 years, 4 years, whatever is the buying period, after the tenure, that equipment is transferred to you in ownership for a negligible amount of 1 rupee or 10 rupee or 100 rupees. So what happens is your balance sheet will add on only that 100 rupees, whereas the entire lease amount you can charge off as expense. So this is one small trick that one particular NBFC is employing. There might be others. If you get to know, do let me know. Now, coming to the other option is outright purchase. So if you have enough cash balance, cash reserve, you can outrightly purchase an equipment in full down payment. It's not very very many people who would like to do that. That's there because that leads to a lot of capital at your place. Now, what is the benefit of having an outright purchase of a medical equipment is that your bargaining power is very high. So if you're bargaining for an outright purchase, do ensure you bargain for maximum discounts, longest period of AMC and CMC and warranty. It might come with a standard warranty of 1 year. You can always bargain to them, no, I'm doing an outright purchase, give me a warranty of 5 years, 10 years. So accordingly you can bargain. So that is the bargaining power of an outright purchase, because the company who is selling you the equipment gets the money immediately. Now next is the deferred payment option. Deferred payment option is an option given by the vendor or the manufacturer of the equipment that, sir, you can take this equipment for some percentage as down payment, and balance down payments will be managed in terms of post-dated checks or regular deposit in the bank account. So this is based on a trust between the supplier and the buyer. So normally a deferred payment option is given only if the supplier or the vendor or the manufacturer knows you that you are a genuine hospital, genuine doctor. So for instance, in ophthalmology, if it's seen that deferred payments by a few companies, they don't give deferred payments for optical shops, because optical shops can come today and go tomorrow, whereas as doctors who are registered doctors entities who are trackable, they will be very happy to give deferred payment options. So do explore. So the next option is bundling. So bundling is when the cost of the equipment is recovered by the company through other means. So bundling has got a very simple calculation. The most common way in which people, many of these companies calculate, is that for every lakh worth of equipment that you want, you will have to give them a business of 3 times. Into 3 or 3.5. They have a standard multiples for that. So it's something like if there is a company who manufactures equipments as well as lenses or consumables. So for every 1 lakh worth of equipment that you want in bundling, you will have to generate a revenue of 3.5 lakhs over a prescribed period. This prescribed period can be 2 years, 3 years. So there is a proper bundling calculation that we can do with using Excel sheets, that how much would be your monthly load and yearly load. But be sure that before you go for bundling, it might look very tempting at the outset, but it can be quite pressurizing, because after some time you change your mind not to use this implant, want to go for a higher implant, better implant for your patients. You would be financially struggling to make that adjustments. Another thing is, during bundling, what a lot of companies do is they will fix the pricing of the consumables. Even if the consumable cost varies later, they generally don't allow you to buy at the lower or higher rate. In some cases it turns out to be profitable, some cases it turns out to be a loss. Also, the ongoing discount offers and other offers will not be applicable when you are in bundling. So when bundling, you should be very sure that you will be able to generate that kind of a business and revenue for the company in terms of consumables. Then only kindly go for bundling. So out of all these options of loans, medical equipment loan, business loan, leasing, outright purchase, deferred payments and bundling, the one that gives you the maximum discount would be an a loan option or an outright purchase. See, understand, the loan option that you avail is actually an outright purchase system for the company, because the company gets the payment immediately. So in these two situations, you should be able to bargain to the maximum. You should ensure that you get the best deal out of it. And what I normally prescribe is that, see, there are various personal ways of how you can get a better deal. So whenever the standard thing is, you first discuss the pricing in terms of bundling, that if I want to bundle, then what is the cost of the equipment, and they will come to a cost. At that cost, you can ask them to convert to deferred payment. At deferred payment, they'll give a discount. Now the moment you go for a deferred payment option, if it costs 10 lakhs, next question you ask them is, outright payment or a loan? You will get the payment outright, so how much additional discount? So with each step of shifting these payment options, you will get a discount. So accordingly, you should be able to bargain well. See, understand, you are not working for the vendor or the manufacturer of the equipment, you are working for yourself. You are supposed to generate revenue for you. You are not there to generate revenue for these multinational companies or these manufacturers. So be sure that you get the best deal out of it. Now, coming to the loan and lease part, I would like to cover some more ground there. One is loans can be taken from two kind of entities. One is NBFCs, that is non-banking finance companies, or you can take it from banks. NBFCs are more eager in lending. Their interest rates are slightly higher. Their processing times are very low. So you apply today, you will get the sanction tomorrow, disbursement day after. So the entire processing speed is much faster, but the only problem is their interest rates tend to be slightly higher than the normal banking industry. So when you go to a bank, the difference is the bank will ask for more documents, will have a higher processing time, a slightly more waiting time, a bit of red tape. If you're taking from some banks, they have more of processing time and more of documentation, but you will get a better rate than what the NBFC is giving you. A bit more on the lease model. So what happens is, if you're a corporate entity like LLP or a private limited company, and or even for a proprietorship also, it works to extent. So any equipment that you buy does not count towards expenses. It is counted towards your assets. So you are spending 10 lakhs and you are buying an asset of 10 lakhs, which adds to your balance sheet. Now what happens is, out of that, the depreciation value of the equipment is what you can claim as losses or expenses, which can be removed from your profit. Whereas when you lease the equipment, what happens is the equipment is never yours. You are just paying a rent for the equipment, and this is the way these one particular NBFC has gone around the system to give a better value for the customer. For the lender, that is the NBFC, it doesn't make a difference whether it's on a lease or a loan. What happens is the machine remains in the ownership of the lending company directly till the time the lease period or the supposed lease period is over. Whereas if they are giving a loan, the equipment is yours but under hypothecation to that particular NBFC or the bank. So do explore these different options. Be clear on what is the budget you have. Don't bite more than what you can chew. That is one thing I want to say, because I've seen instances where hospitals have bought equipments and then in bundling with a projection of around 30-50 cases in a month, but it doesn't work out and they have to give it back. There's a lot of losses that they have to take up. So don't enter into a situation where you can't repay the amount that you have promised to repay. It generally gets embarrassing. It affects your credit history in case it's a loan. So these kind of calculations you should do before go and invest in equipment. Anything else, do feel free to get in touch with me, and contact details are in the about section, and I'll continue making such videos. Do let me know any topic that you would like me to touch upon, and I'll try to do justice to it. These are just small snippets to get you start thinking, and these are no way a comprehensive coverage of these topics. This is just an insight into, just a peek into this entire model, which I believe everybody should be aware of who runs a hospital or a practice. Thank you.